Buy or sell the mortgage-backed securities ETF. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. We go to fixed income, and here we have the mortgage-backed securities ETF. It's at 52-week lows, and we have seen a minus 2.4-ish% pullback. So if you remember back, mortgage-backed securities, they have an ominous history in the financial markets. Back in, the housing bubble, the Great Recession, it was, the blame was put on mortgage-backed securities. So that's something to think about. A very nice history here. Here you can see when it went public here, the ETF, late in 2009, and I guarantee you that the ETF would look very different if this one had been trading throughout that cataclysm. Okay, so something interesting is happening. We have recently pulled back to the red 200-week moving average. Then we have to ask the question, does that matter? When we look back, we see that there's been a very clean interaction with that moving average and price for a long time. Back here it was resistance, here support. Because of that, it has legitimacy. Hence, given that we found support here, I would give the benefit of the doubt to the bulls. So this is like their opportunity to shine. So very interesting support level here with a long precedence of working out. But if the bulls screw this opportunity up, that would obviously be bad. So now we are expecting the bulls to act, and everyone is expecting them really to act. You could argue that we are forming a very big picture inverse head and shoulders pattern. That is bullish. Going to the daily data points. Then we are below a bunch of moving averages. So from a moving average perspective, you have to go here to the weeklies to really make that, bullish case. Looking at, the distance here between price and, some of these moving average indicators, we are at an interesting level. I think that, the RSI here, it's at a very low level of the range. So throughout the history of this ETF, the vast majority of time, we do have a higher RSI. And, there's obviously a link between the RSI and where the price is. Let's go here to the daily data points. So what I do find interesting here is that we do have, if you look here at the accumulation distribution indicator, I think that one is more interesting. You do see that it's been going up, notwithstanding, this pullback. So here we see this deterioration in price, but accumulation distribution is going up. So there's definitively are buyers. So there is a divergence here. Let's look at some of the other stuff. So let's look at some correlations. We do have a long-term. We have a 28 strong correlation with the S&P 500, 71 with the total bond market ETF, the BNDX, minus 34% with the bank ETF, KHBE, then minus 26% with the dollar index. Short term, we have minus 64-ish with the S&P, 48% positive with the bond market, minus 66% with the bank ETF, and minus 78%, so very strongly negative with the dollar index. Looking here at the long-term correlation with the dollar index, we see that we are at a very low end of that range. Then we look at the seasonality. Over the last 5 years, December has been one of the strongest months, and January is also a month in which this ETF closes higher 80% of the time. That is pretty good. Over the last 13 years, we do close higher 54% of the time here for this December. Nothing like especially bullish, but when we compare December to November, October, and September, then it is, you see that this general increase here in strength. So that is, overall, there's this bullish lean. The most interesting thing here, I think, is that January is a super strong month, closing higher 83% of the time over the last 13 years. So I don't think this is a very appealing candidate for short sellers. Looking at Finviz, we have these trend lines. Options are available. Here you can see, the performance over different time frames. A bunch of red numbers, as you can see. When we compare the BNDX with the VMBS, the mortgage-backed securities ETF, and we look here at, let's look at performance. Then we do see vis-a-vis, the dividend. So 1.12 for the BNDX and 1.34% for the VMBS. So the yield here is pretty similar. Yeah, not, a very impressive yield for any of them. What is interesting here, I think, with the VMBS is that we have the ability to get it at a long-term support level. So yeah, if I were to sum up here my take on the VMBS, so we looked here at, the technicals first. Yeah, we do have a very long-term support, and the benefit of the doubt should be given to the bulls. But there is this clear line in the sand. So if the bulls are not able to use this opportunity, especially in the context of the super strength of the next month, then, that's obviously not a good sign. But yeah, I would lean bullish here. I think there's too many indicators pushing it in that direction. Because if I were, a bear, wanting to short, the VMBS at these levels, number one, I would feel very uncomfortable about that long-term support, and also the ferocious strength of January is not appealing, for the bears. So there's multiple factors here that would attract more bulls, and there's multiple factors that would spook away the bears. So yeah, that's the logic.